Hello friends, welcome back to the continued learning of part 2 of Numericals of National Income. So let's begin from where we left, and here we go. Let's continue doing the assignment we had previously done. So in the previous video we talked about few numericals on the basis of value-added method and income method. So let's begin now from expenditure method. Right. First and foremost thing, what does expenditure method give us? Expenditure gives us GDP, MP, and it's made up of four components: private final consumption expenditure, government final consumption expenditure, gross domestic capital, gross domestic capital formation, and net exports. So let's check out all these components here in the given question. Private final consumption zone. Here it is. Private final consumption expenditure, 1,000. Government final consumption expenditure is here, 300. Gross domestic capital formation. Please pay attention. It's a star marked question. Gross domestic capital formation is required. So instead of gross, we are given net. It means we have to add depreciation here to make it gross. And one more thing, fixed capital formation is given. It means one component of capital formation is given, the other, that is the stock or inventories, are missed out. So if we want to make it gross domestic capital formation, we have to add in this net domestic fixed capital formation two more components: depreciation and change in stock. So let's do it. It's 150 plus depreciation, and depreciation is given to be here, 30, plus change in stock. Stock is given in two parameters, closing and opening. So closing stock minus opening stock, 40 minus 50, that gives us minus 10. And net exports, mind you, net imports are given, and net imports means whichever is the figure given to us, we have to use the same figure with the opposite or reverse sign. So plus net exports means plus minus of 20 instead of plus 20. And this becomes 1,300, 1,400. Okay, this minus 20 and minus 10, that is minus 30, go with 30. So I'm left with 1,450. This is rupees and this is crores. And they want us to make domestic income. Domestic income is equal to NDPFC. So what is the conversion here? From G to N, we have to subtract depreciation. From MP to FC, it means NIT is to be subtracted. So now minus depreciation, depreciation is 30 here. And NIT is also clearly given. The way it is given, we will take exactly the same with same symbol, right? So this becomes 1,450 minus 30, that becomes 1,420 plus 10, that is 1,430, right? So this is minus 20 is the net impact, so it becomes 1,430, and that is our right answer. I hope it is understood by all of you. So now let's move to the next question. Next question says, again, because it's based on the expenditure method, so we would begin with the same very formula, and that formula says, I will get GDP MP by four components: private final consumption expenditure, government final consumption expenditure, gross domestic capital formation, and net exports. Now let's check out. I'm not really able to have this component with the same word. It means household is given. Household is the other name for this. But whenever we are looking for household, we should keep in mind there may be another component of non-profit making organizations, right? So here there is no mention of the same. So we'll go for this 400 as private. Government final expenditure is 90. Gross domestic capital formation. So gross domestic capital formation exactly given here it is 80 plus net exports. So net exports. Now again there is a trap. Exports are given and instead of imports, net imports are given. It means trap is this. We would overlook this exports but we will take net imports with the opposite symbol, that is minus 15. So how do we go about it? So this becomes 170. So this becomes 570 minus 15. That is 555. So this is rupees and crores. But we are halfway so far because we are to find GNP at FC. So GNP at FC will be equal to GDP at MP. Now check. G is the same domestic, add NFIA minus NIT, and we're done with the final answer. So this is 555 plus NFIA. Now, where is NFIA? Again, just please be mindful. Net factor income from abroad is not given. It's to abroad given to you. It means the symbol has to be reversed. So instead of minus 5, we'll write 5 here and minus NIT. NIT has to be calculated within the bracket so that we are not mistaken with the symbols, right? So IT is 5 and subsidies are 25. So I'll write it within the brackets 5 minus 25. I'll solve it first and then move ahead, right? So this becomes 560 minus, and we are having here minus of 20. So ultimately that turns out to be positive and that becomes rupees 580 crores. And this is the final answer. I hope you are getting your doubts clarified. Let's go for another numerical. Maybe it gives you some more exposure. Again, because it is based on expenditure method, I just write the traditional beginning GDP at MP is equal to private final consumption expenditure, government final consumption expenditure, gross domestic capital formation, and net exports. So now look for private final consumption expenditure. I am able to find this household, but as I told you in the previous question also, wherever we have household, we should look for the other component of non-profit making organization, and here it is. So here in this case, the private final consumption would be the sum total of 6,000 and 2,000. So this becomes one component. Government final is this 1,000. Gross domestic capital. Yes, we have been given fixed capital. So please be particular about this terminology. It means this is incomplete and we need to add the stock, right? So again, there is another format of stock given. This is rise in stock. Mind you, had it been fall in stock, we would have taken the reverse symbol. Change in stock and rise in stock come as it is. So only 100, exactly the same way it would be used here. Net exports means exports minus imports. So 70 minus 120. So we have 70 exports minus 120. So what do we get? 8, 9, 9,600. So 9,600 plus, and we are having minus component here. So I'm left with 9,550 as this component of GDP MP. Now I am to go for NDPFC. So NDPFC requires again the changes to be made. So GDP MP minus depreciation gives you N. DPDP remains the same, so MP needs to be converted into FC by subtracting NIT. So it is 9550 minus depreciation. Now let's. Okay, depreciation is given but with the other name, and this is replacement cost of assets or barely the replacement cost. So this is depreciation minus NIT. NIT is IT minus subsidy. So here we would always be solving it within the brackets IT minus subsidies, so that because of this negative sign outside the bracket, we should not have the incorrect calculations, right? So what do we have here? So this is 60 to be subtracted from here. So this becomes 9490 minus, this is 650. So just check it out. 9 minus 5 gives you 4, and this is 8, and this is 8. So the answer is 8,840 rupees and crores, and you are done with some more added learning of the concept of NPO, the concept of replacement cost, and rise in stock. Let's carry on and solve this question number 4, NNP at MP. Again, we see government final, private final. So the same very statement of expenditure method. GDP MP is equal to private final consumption expenditure, government final consumption expenditure, gross domestic capital formation, and net exports. Now let's check out private final consumption, clearly given here 500. Government, yes, 500. No, it is 200. Gross domestic capital formation. Now see, again, we did one more question previously of this nature, that there are two deviations. One, it is net, and the other, it is fixed. So there are two corrections to be made in this figure of 100, right? Because it is net, so we would add depreciation, and depreciation is given with the new name again, consumption of fixed capital here. So this is depreciation plus we have fixed components. So inventories or change in stock is to be added to make it the full component of GDCF. Underline it to make it look like one full component. And net exports is clearly 40. Have a linear simple summation: 500, 700, 800, 920. So this is rupees 920 crores, and we are done with GDP at MP. Now let's do the second part of the numerical, NNP at MP, and we have to find it from GDP MP. So again, those three statements, from gross to net, I would subtract depreciation. From domestic to national, I would add NFIA. And MP remain the same. So my answer is GDP MP is 920 minus depreciation, as I told you, consumption of fixed capital, that is 60. And NFIA, net factor income to abroad again. So we watchful about this symbol. I have to reverse the symbol. So 90 needs be subtracted from this. So this becomes 830 crores, and that's your final answer. One more thing here needs bit of more explanation, as we needed N here, NNPMP. So had we done this concept with net, I just mean to say, instead of gross domestic capital formation, if we pursue it with net domestic capital formation, we would have net NDPMP. It means here, once we are adding this depreciation and then we are subtracting this depreciation, because ultimately we need N. So some people also straight away just go ahead with NDCF and then they eliminate this need of treating depreciation once again. Try and understand. This method is 101% okay and correct, but if you want to eliminate this addition of depreciation and then subsequently subtraction of depreciation, that also is flawless and correct. Moving ahead, we have NNP in the demand now. So let's check out with our own traditional GDPMP. This is the basic statement of the expenditure method. GDPMP gives us private final consumption expenditure, government final consumption expenditure, gross domestic capital formation, and net exports. After doing so many numericals, now we know that we should not be moving the way the things are given. We should be posting the data as per our need. So we should not be doing 1 plus 3 plus 2 minus 4 plus 6 gives me the right answer. No. Ideally, this should always be given in steps. Like this method gives me GDPMP. So ideally, first you should find GDPMP and then the next step should be you find whatever is asked. The benefit of step marking is that if by chance you do not land on the right answer, if you go all together, you may be losing the whole content, all the marks, right? But if you have done in 2 steps and your GDPMP is correct and you're mistaken here at NNP at FC, so you would be given step marking and partial marks would be awarded to you. So always follow this schematic progression of steps. So GDPMP is first private final, then government final, then gross domestic. So here we have net domestic. As I was telling you, that if we do not with G but with N, so that also will give you the correct answer. So let us do this numerical from that perspective. I'm just redoing this formula and I'm trying to write, instead of GDPMP, I'm trying to do NDPMP here and NDCF. Why I'm doing so? Because we would not add depreciation here and subtract subsequently. So we have just eliminated that one step. So NDCF is given. So NDCF is given. I'm not adding depreciation because in the next step we would be subtracting. So I'm just getting away with that step. Now net exports and we are given net imports. So the opposite sign. So here we have, there is some malfunctioning. Yeah. So here we have some problem. Never mind. The answer is The answer is 6 plus 28 plus 19. This is 920 rupees and crore. Now, what do I need to convert it into? So NNP at FC is to be got from NDP at MP. So what do I do and how do I do it? So N is the same. It's domestic to be converted to national. So plus NFIA, and MP to be converted to FC, that is minus NIT. So here in this question, we are trying to solve the question, but we are not using depreciation neither in the first step nor in the second step. So the answer is 920 plus NFIA. So NFIA is again, here it is 2. So I am taking the opposite sign, minus NIT is given 70. So what do I have? 920 minus 80. What do we get? 840. So this is my answer. And we are done with this numerical also based on expenditure method. Now I have some collection of both the methods to be used in one particular numerical. Ideal situation is, because it's the same economy you're talking about, so whether you find the solution by income method or value added method or expenditure method, the answer should be the same. But in the rarest cases, if there is some deviation, don't get panicked, because yes, there can be some numerical problem or some mistaken values given to you. But ideal situation should be that both the answers should match with each other. So let's talk about what do we need to calculate. We need to calculate the national income. It means I am in need of NNP at FC. Okay. Now, how do we do it? By expenditure method and by income method. So let's go for finding expenditure method first. Right. Now, you would mention that using expenditure method. This is ideal way of presentation, and this is your part 1 of the solution. So first we find GDP-MP, and this is private final, government final, gross domestic capital formation, and net exports. Just to find fast. Private final, government final, so this is 1200 plus 600 plus. Here it is. Again, we can do the same way, because ultimately we need to have N here. So if I take N DCF and I don't add depreciation, that also will work. So I'm just doing it this way for you. If I am writing N here, I will write N here, and I will take NDCF, that is 340 plus net exports. Net exports is minus 40. If it is minus, I have to take it as minus only. So my answer becomes, so minus 40 means we are left with 300 here. So 6 plus 3, 9. 900 to be added, it means rupees 2100 crores is NDPMP, but I need an NPFC. So how do I find from NDPMP? I hope you have understood why I have got NDPMP in this numerical instead of GDPMP. So N is the same, domestic, add NFIA gives national, and minus NIT gives FC. So my previous figure is 2100 plus NFIA, and NFIA here, net, what is given to me? See, this is factor income from abroad. Probably I'm not able to see. and theta. See, again something special for you. What is theta? You should be well aware of the terminologies given to you. Theta is factor income to abroad. They have given me factor income from abroad in expanded format, and this is nothing but FIFA fact. FIFA. So FIFA minus theta gets you NFIA. So please be mindful of all the short forms also. So this is NFIA is 30 minus 60. This is negative for us in this numerical. NIT is 60 minus 60. What am I left with? 2100 minus 30 minus 60. It means 2010. Out of 100, 90 have gone to adjust the negative, right? So 2010 is my answer using my expenditure method. So let's check it out. Is income method giving me the same? Ideally, it should. So income method, let's find the second part. Income method says, it's not moving it. Yes. Income method gives me NDPFC. It's just one step away from NNPFC, means the national income. So let's check it out. NDPFC, this is C plus O plus M. Compensation. So is the compensation given to us? Compensation of employees, it's clearly given 1000. Plus operating surplus not given, so I have to club all the content. Rent, interest, royalty, and profits. So rent is 250, interest is 150. So this is 250 plus 150. Royalty is not given and profits are given to be 640. So this is 640 plus mixed income. And yes, if it is not given, never mind. It's just a zero component here for this very ongoing question. So we have just try adding 4 plus 5, 9 plus 5, 14. So this is carry 1, 6, 7, 8, 9, 10, 0, carry 1. So this is 2040 in the first step. Let us check out. So we have what is to be found? NNP at FC. So this is NDPFC minus or plus NFIA. Domestic at NFIA gets you national. So we have 2040 plus. NFIA is FIFA minus theta. So this is 30 minus 60. Here it is 2040 minus 30 is equal to rupees 2010. Is it matching? Yes, this figure is matching, and this gives the confirmation that our solution is right. Moving ahead, I hope that is adding to your understanding of solutions to all such problems. Probably this is the last question. No, this is last but one. Yes. Let's move ahead. This question also talks about finding some variable GNPFC by both expenditure and income method. So, expenditure method, what do? We start with, because it is GNP required, so this time I would be writing GDPMP. So GDPMP is equal to private, government, gross domestic capital formation, and net exports. Did you notice that for each and every numerical so far solved by me in both the sessions, I wrote this formula every time. Why so? Because the CBSE marking says if you write the correct formula, if the question carries the worth of 3 marks, you would be given 1.5 marks for the formula. And that is a free benefit to the students. Means even if without starting, you're getting half the weightage, that's a wonder. Right? So always develop a habit of writing the formula, even if you're writing in your rough notebook. So this is private, this is government. Gross domestic capital formation, gross domestic capital or gross capital means the same to us. And net exports also is given. It's a straight question. So this says 850 plus 600 plus 330 plus net exports is minus 30. So this gives me 300. So 900 is to be added here. So it becomes 1700 rupees and crores. And what am I required to find? GNP at FC. So what would be the conversion like? Conversion would be domestic, add NFIA, and subtract NIT. So from this numerical, add NFIA. So NFIA, net factor income from abroad. So it's the component required, that is as it is to be written, means instead of writing plus, I'm writing minus 20, or I may write plus in bracket minus 20, means the same. Minus NIT. So NIT, IT minus subsidies, but not required. It's a straight value given. Net indirect taxes is 60. So I have two components of minus. I'll write 1750 minus 80. So this becomes 1670. This is the answer from one method. Now let's wait for the second half to verify whether the answer is correct or not. Meanwhile, let's go for income method. If I have the same value, these are the loveliest questions from your national income accountancy, because that give you the confirmation and verification there and then. So income method gives me NDPFC. And every time I'm beginning with any method, I'm beginning with the basic statement. So this is compensation of employees, operating surplus, and mixed income of self-employed. Somewhere I write I, somewhere I write Y, because income is denoted by Y symbol very often in economics. So it's taken and accepted both ways. COE, here COE is not mentioned, so because I saw wages, it means cash component is given. Mixed income also is given. I can write mixed income here 60. Right, compensation and then employers' contribution, so that would be added. So wages and salaries, 950 plus 50, I should be writing 950 plus 50. Is there any component in kind? No. Wow, a trap is given. Compensation of employees is given, but it is said paid by the private sector. It means though the name sounds the same, similar one, but it is the component of the whole compensation of employees, because in India we have private and public sector coexisting with each other. So this is just a trap for you. Don't get swayed away. This is a trap. You wouldn't be simply overlooking this point. Operating surplus is given clearly here, 600. And mixed income we have already written. So yeah, it's all sorted, I've seen. So 1,660. 1,660 crores and rupees. And what is to be found? GNP at FC. So this is NDPFC is what I have, plus depreciation will give me G, plus NFIA will give me N. Rest is the same. So how to go about it? 1660 plus depreciation. Depreciation, what's the name given here? I have to check so cautiously. Oh, depreciation is, I found it. It's hidden. It's given, but it's hidden. How? Wonderful question. Star mark. Gross and net component when are given, that is simply meant to give you depreciation. So I'm just writing as a working note here. Depreciation here is gross GCF minus NCF, and that will give me 330 minus 300. 330 minus 300, that gets me rupees 30 crores is depreciation. So I'm writing here. Plus NFIA net factor income from abroad minus 20. So what do I do? 1690 minus 20 is 1670. And it looks so good that we got the same numerical value from both the methods. That gives the confirmation, yes, this is done correctly. Right. So let's proceed and move towards the last question of the ongoing session here. This question wants GDP at MP to be found. Okay, I need GDP at MP, right? I need factor income from abroad. Factor income from abroad. Mind you, they haven't asked for NFIA, they have asked for FIFA. It means, see, factor income to abroad is given, and if NFIA is found, we are easily able to have this component. Now let us see how to begin this question from, because we have to check which formula and which method would be used. So though the capital formation is there, but rest components of expenditure method are not there. And I can see the compensation of employees and the parts of operating surplus. So this is a clear hint that we have to begin our question by doing NDPFC, means we are beginning with income method, right? So income method will give us NDPFC, that is domestic income, and that has to have COE plus operating surplus plus mixed income of self-employed. So compensation of employees is given 1,000. Operating surplus, we've used this operating surplus. So because clearly it's not given, let's club it. Rent, interest. So I'm writing rent, interest. Royalty is not given and profits are given. So it is 300. So I have got this operating surplus and I'm nowhere able to get mixed income. Never mind, that's the minor component in 50% of questions that's not given. So what do I have? 3 plus 2, 5 plus 2, 7. It means it's rupees 1,700 I have from NDPFC. Now I have 3 components with me. NDPFC is given and I am also given NGNPFC. So let us see GNPFC. Can we create any relationship with NDPFC? Because I have found NDPFC. So N plus depreciation gives G. Domestic plus NFIA gives N, and rest is the same. So I have this component with me, and NFI is not here with me. Depreciation Depreciation again is given in a hidden format. So how do we do? We have to go ahead. Hold on. Let me have some more working area for you. So depreciation, I'll write in the short notes, right? So depreciation, how can we find? It's the simple difference between the gross and the net of any same component. So gross fixed capital is given and net domestic capital is given. So I'll write gross domestic capital formation minus net domestic capital formation. And gross domestic is not given to me. It's gross fixed 750. It means I have to add inventories or stock here. So I will write 50 here. This becomes gross domestic capital formation minus NDCF net domestic capital formation, that is 600. So this is 800 minus 600 gets you rupees 200 crore as your depreciation. So if I want to find GNPFC, GNPFC is already there with me, right? NDPFC also is there with me. Depreciation is also there with me. So it means I can find NFIA from this equation. Let's eliminate NFIA in the next step. NFIA would be equal to, I'm just transposing these to the other side. I will have the equation GNPFC minus NDPFC minus depreciation. Now, GNPFC is given to be 1800 minus NDPFC we have calculated to be 1700 minus depreciation is 200 as per this calculation. So this is 1900 of minus and 1800 of plus. It means minus 100 is the value of minus 100 crore rupees is the value of NFIA. And what is required? I need GDPMP and FIFA. So again, I'm writing here because I'll just scroll it down because I'm having some shortage of space to write. So first, let us sort out with NFIA. So NFIA we have of minus 100 value. So NFIA is equal to FIFA from abroad minus to abroad. NFIA we have calculated to be minus 100 and FIFA is to be found. FIFA is unknown and theta is given to be 100. So FIFA becomes 100. When it goes here, cancels this minus and becomes 0. So we have found one answer of this question. It's a wonderful question you can think about. So FIFA is sorted and that is 0. And the last step now is I need GDP at MP. We can have it from any of the variables. We have NDPFC, GNPFC, values are given, and their other things, other components which help us find the data are also given. So this is, I'm using GNPFC. GNPFC is given to be 1800, right? 1800. So G and G are same. N minus NFIA will give us D and FC plus NIT will give us MP. NFIA is net factor income from abroad. We calculated to be minus 100. So I'm writing minus 100. Plus NIT is straight away given to be 150. So my final answer is 1800 plus 100, 1900 plus 100, 2050. So my answer is rupees 2050 crores is GDP at MP, and that is the need of the question. GDP at MP and FIFA. I hope this lecture was full of understanding and full of new terminologies and steps for you. Wishing you more of learning. Have a great day. Bye. God bless.